Over the past few years, a little-known Swiss sneaker brand has rocketed from obscurity to a staggering $7 billion IPO, capturing the imagination of athletes and investors alike. But here's where it gets interesting. Despite all the success, ONON holding stock may be seriously overvalued. Hi, and welcome back to Investing Till Freedom, where we break down complex financial stories so you can make smarter investing decisions. In this video, you'll learn how ONON holding grew so explosively, the surprising reality behind their financials, the intrinsic value of the stock, and whether this is an opportunity or a cautionary tale. Let's have a look, shall we? ONON holding began in 2010 with a simple idea: reimagining how running shoes absorb impact. Legend has it that founder Olivier Bernhard cut up a garden hose to prototype the first cloud tech soles. Back in the early days, when ONON was little more than an ambitious startup, the founders tried to pitch their concept to major sportswear companies, including Nike. According to co-founder Olivier Bernhard, they hoped the big brands might see the potential in cloud tech technology. But the response was underwhelming. Nike in particular passed on the opportunity, effectively saying they didn't see a need to reinvent running shoes in such a radical way. Bernhard has said in interviews that this rejection only fueled their determination to prove the skeptics wrong. Fast forward a decade, Roger Federer became both an investor and a collaborator, helping propel the brand into the global spotlight. Federer isn't just another celebrity endorser. He's one of the most successful athletes of all time, with 20 Grand Slam titles and a reputation as the ultimate Swiss icon. In fact, everything Roger touches seems to turn into gold, whether it's sports, luxury endorsements, or philanthropy. His partnership with Rolex redefined how a brand can leverage elegance and performance. His Uniqlo deal made headlines for its scale and strategic reach. And when he invested in ONON, it wasn't merely a financial move. He committed to co-developing products and shaping the brand's identity. For ONON, Federer's involvement was a credibility rocket booster. Investors, retailers, and consumers all took notice. And it's not just about marketing. Federer has been instrumental in helping ONON expand into tennis, a category they're aggressively pursuing. Together, they co-created the Roger Pro, a high-performance tennis shoe that blends ONON's cloud tech technology with the demands of elite play. What sets ONON apart is their patented cloud tech cushioning technology, designed to deliver soft landings and explosive takeoffs. Today, ONON combines Swiss engineering precision with athletic performance, winning over everyone from marathoners to celebrities. The numbers will shock you. In 2024, ONON reported revenue of 2.32 billion Swiss francs, up 29.4%. Net income up 204.5%, an astonishing profit surge. Gross margins expanded significantly as direct-to-consumer (DTC) sales climbed. This kind of growth is rare in footwear, and it's clear ONON is doing something right operationally. But that's only part of the story. The athletic footwear market is massive, worth over $131 billion globally. Yet, ONON holds just about 2% market share, compared to Nike's commanding lead. Their competitive edge lies in premium positioning, unique tech, celebrity endorsements. International expansion has been a bright spot, especially in Asia-Pacific, where sales jumped 95% year-over-year. Let's look at the indicators. At the current price, ONON trades at a P/E ratio of 67x versus the industry average of 18.25x, a market cap that implies massive future growth baked in. Our discounted cash flow analysis suggests an intrinsic value around $47.71 per share, meaning that at the current price as of today's date $53, the stock is slightly overvalued. Before you jump in, consider the risks. Competition. Nike, Adidas, and new entrants are fierce. Economic sensitivity. Consumers may trade down in recessions. Valuation. Even small misses in growth can hammer the stock. Bull case. ON sustains premium growth and margins, justifying the multiple. Stealing market share, especially from Nike that at the current stage is stumbling and trying to recover the profitability of 5 years ago. Bear case. Growth decelerates and valuation compresses sharply, making it really hard to justify a PE over 60. So, who should invest? Growth-focused investors willing to tolerate volatility. Value investors should likely wait for a better entry point. After weighing the fundamentals and valuation, my recommendation is a hold with caution. Price target: between $40 and $55 in the medium term. If you're considering buying, watch for a pullback closer to intrinsic value. If you found this analysis valuable, like this video, it helps us reach more investors like you. Comment below. Do you think on holding is the next Nike, or a bubble waiting to burst? And don't forget to subscribe for more deep dives into stocks shaping our future.